Welcome to the Nate Gration Show, where we talk all things personal finance, investing, and entrepreneurship. I'm Nate, your host. Thank you for joining me here today. It is the 19th of November 2022, and we have a portfolio report for the past week, and a look at the stock market, what's gone on in the past week, and a quick look into next week's market and what we're doing and our plans for next week. But let's take a look at our portfolio for this past week. I want to thank you all for joining me here today. I invest on eToro. The link is in the description below if you're looking to get started investing. Use that link and you'll get an extra $50 once you've deposited $100 and begun investing. And you can also connect with the community on there and connect with me on eToro. But our portfolio, after a huge week the week before of gaining over 6%, in our portfolio, we did see I would call this a slight pullback. I wouldn't call it a downturn, but a slight pullback. We declined 1.32%. The market was very much up and down this week, and flattish to slightly down, as we see closing the week down 1.32%. That is actually, I would look at that and say that after a strong week like we had, that's a good sign, because the market didn't just reverse. The week before we received the CPI number that was weaker than expected on a Thursday. It saw a 5% rally in the S&P 500, and then to have a week following that where it didn't just reverse shows that while the computers and things may have automatically jumped in and purchased things, the humans then kept it. And so this actually, I would lean to it being even more positive of seeing an end of year rally as we go to year end through to the end of December, seeing that end of year rally, which, believe it or not, we are getting closer and closer to 5 weeks till Christmas, which is insane. Absolutely insane. It's just flying by. We did invest funds this week on Friday. The market was opening down and we saw the pre-market, and so we put funds into VOO. A small portion went into VOO, that's Vanguard's ETF that tracks the S&P 500, and that went into that's where VOO is where we invest our kids' college fund. The remainder of our planned investment for the week went into NOBL, that's NOBL, a slightly bigger portion. NOBL is a ProShares Dividend Aristocrat ETF. So it means it's got 65 companies from the S&P 500 that have paid dividends 25 years consecutively at least. They have, over the past 5 years, they've returned over 50%, and they have a dividend annual return of 2.05%. And so it's a strong, steady dividend they've paid consistently over the past 25 years, and it's good. So that's what went on in our portfolio. That's what we did. We invested about just over 1% of our overall portfolio. We invested this week. Now let's look into what happened in the market. As mentioned, this week was a bit of a roller coaster, just kind of going up and down, fairly flat through kind of the middle of the week, and then it took a bit more of a downturn, and then we closed the week down 1.32% in our portfolio. As mentioned above, this and before, this is a good thing. I see this as a good thing because it wasn't a complete reversal. You know, if we dropped 6% and reversed what happened the previous week, it'd be unsure about things. But it looks like we're trying to hold this position, and that's a good thing. We did receive the PPI, or the Producer Price Index, which came out weaker than the expected numbers, and so it came out weaker than what was expected, which is a good thing, another sign for inflation peaking. The truth is, though, we do need a few months of this before we declare, inflation is on a downward trend. 1 month's numbers, 1 month CPI, 1 month's PPI isn't enough. We also received in the middle of the week the retail sales number for last month. This came out stronger than expected at 1.3% gain versus the expected 1%. Now this has two sides to the coin. On the one side, it shows that the consumer is strong, and the strength of the consumer is stronger than expected, and is the consumer is able to handle what's happening. On the other side, it could well send a message to the Fed saying their job is not done, and they need to continue the rate hikes and continue being aggressive and all of this. So it's a bit of a two-sided coin, the retail sales number, but I'm fairly happy with where it came out, slightly stronger than expected. If it was too strong, then yeah, it would send a very strong message to the Fed that they need to raise rates stronger and be more aggressive to try and bring that down, because that could continue to bring inflation up. The Fed sent out some people this week. There was a bit of Fed speak after the previous week and the big rally in the market. The Fed came out and was quite hawkish this week, and quite aggressive in their tone. Not necessarily aggressive, but quite strong in their tone and hawkish tones, trying to calm the market down. Essentially, they don't want it to go crazy, because they're probably planning, more rate hikes, and we'll probably a lot of people are leaning towards a 50 basis point rate hike in December. Is what a lot of people are leaning towards after the CPI and PPI number that came out. With all this happening in the week, you can kind of see why the week was flat / slightly downish for the week. You can see why that happened, and why we closed the week slightly down. Now let's take a look into next week. Next week is going to be a bit of a shortened week in the New York Stock Exchange. Thursday is Thanksgiving. And traditionally what happens is Thursday's a public holiday, obviously, being Thanksgiving, so the New York Stock Exchange won't open. And then Friday is going to be a shortened day, usually, of the New York Stock Exchange, so it won't be as long. Friday will be a shortened day on the New York Stock Exchange. Monday, Tuesday, Wednesday will continue hours as normal. I want you to know also we are traveling in the coming week, and so my communication, I'll still be communicating with everyone on eToro and on YouTube. You'll still see my articles that pop up. I'll keep my pulse on the finger of the market, my finger on the pulse of the market. I'll keep my finger on the pulse of the market and everything, but with traveling it may not be as regular posts that I do on YouTube and on eToro. But that's what's happening next week. In our portfolio, we're not planning on making any new investments. We're going to keep things pretty steady for a shortened week. The volume's not going to be as high with the public holiday and the shortened day, the volume of trading. And so we're going to keep things pretty steady in our portfolio, not make any crazy big movements. If we see a huge movement in something like Nike or Under Armour, we may look at taking profits there or something like that in our single stocks and moving them elsewhere. I've got my eye on Rivian again, so my eye is on there again. My eye is on a few single stocks as we're able to invest in those again, following our investment strategy. But that's the plan for next week, keeping things fairly steady. We're traveling, and so I won't be posting as much, but I'll keep everyone informed and up to date. If you haven't connected with us on our YouTube channel, it really is the hub where you can find everything. You can find my shorts, the short 1-minute videos that I put up, keeping people up to date with what's going on in the market, in our portfolio, and with what's some investment tips and personal finance advice and things like that. So you can find the shorts there, you can find my podcast there, these recordings, and you can also find all the written articles that I put on eToro. You can find those on there on the channel under the community tab. So YouTube, the Nate Gration Show. But thank you everyone for joining me this week. Thank you for all the new investors and followers on eToro. And if you have any questions, feel free to reach out, feel free to connect with me. But I hope you have a great weekend. I hope you have a great upcoming week. We'll see you in the next episode.